Guys, mortgage rates are soaring, the stock market is plummeting, and crypto is dead. But what does this mean for the housing market? In this video, I will share with you what this means for the housing market both now and going forward, and I will also share with you how you can capitalize on the opportunities that are about to come up. What is up, everybody? Welcome back to the channel. My name is Jay Costa. I'm a local real estate agent and investor here in Northern New Jersey. I appreciate you tuning in, and if you get any value or enjoyment out of this video at all, please consider smashing that like button down below. It truly helps me grow the channel. I appreciate it. Now on to the video. So let's talk about the housing market, where it stands now. First things first, you need to be aware that the national housing data may not show the same trends as your local market. And if you have any questions about your local market, you need to be talking to a local real estate expert. But as we see it now, there has clearly been a very substantial shift in the housing market. This started probably around March when the Federal Reserve decided to start raising interest rates to combat inflation. Mortgage rates have been on the rise since then, severely dampening the demand that we've been seeing the last 2 years, bringing those all-time high demand levels right back down to earth very quickly. But in addition, since then, the stock market has tanked 25%, and crypto has completely crashed for the time being. So buyers who were already struggling with home affordability from the all-time high prices are now facing even worse home affordability levels because of the quickly rising interest rates and the extreme uncertainty that we're facing with an upcoming looming recession becoming more and more likely every single day. We are starting to see major inflection points in the housing market data around the country, and it's starting in some of the hottest markets the last 2 years. For instance, in Austin, Texas, you're starting to see a huge uptick in both active listings as well as price drops. You're seeing the same thing in Las Vegas, Nevada, Boise, Idaho, among others. In addition, pending sales are down drastically year over year and have been flatlined during what's supposed to be the strongest time of year in the housing market, spring and summer. So it seems like with all the negative news lately, most buyers are in a bit of a pause period to see how things play out. And you can't blame them. I hear many real estate agents as well as lenders on social media say that 6% mortgage rates are still historically low if you go back to the 70s. That is true, but what is most concerning is the pace at which these mortgage rates are increasing. Even after that first initial jump up in the 30-year mortgage rate, we were sitting at about 5.25% for a 30-year fixed rate loan. But then we got a much hotter than anticipated CPI report, which forced the Fed to raise the federal funds rate more than anticipated, and mortgage rates have jumped over 6% just in a week. Who would even want to go under contract in this sort of rate environment? Just the simple decision of when to lock in your rate would be enough to give me chest pains at night. Now, this isn't all bad news. In fact, I would argue that this environment is going to provide opportunity to both buyers and investors that did not exist the last 2 years. First, with rates being so much higher and most buyers sitting it out, you're going to have way less competition from other buyers out in the market. That means you're not going to have to go way over asking to get an offer accepted, and more of your offers will be accepted in this sort of environment as sellers become more desperate. Also, as more sellers try to cash out and sell their property, more homes are going to be on the market to choose from, more inventory. That means you won't have to settle on a property that doesn't fit your criteria. Now, investors will also benefit from less competition out in the marketplace as well as more inventory to choose from. But in addition to that, as pending sales slow and the housing market stalls out a little bit, it will be easier to analyze a deal for an investor. That's both for a flip as well as a buy and hold rental property. So here's where I think the housing market will go from here. There are so many macro factors that could influence the housing market and the economy as a whole. So it's really impossible to know. But since the housing market is so dependent on interest rates, let's stick with that as the X factor. If interest rates stabilize where they're at now and maybe even come down a little bit, I think buyer demand will pick back up once they see stability. But if rates continue to go higher than anticipated and inflation is harder and harder to get a hold of for the Federal Reserve, I think buyer demand is only going down from here, and we may be looking at a very, very stale housing market. And eventually, home prices will go down. So if you're a home buyer looking in this market, my advice to you is this: keep looking as long as your time horizon for owning this property is longer than, say, 5 to 7 years. And also know and be aware that you don't have to go way over asking price anymore on these listings. You can negotiate, you can keep your inspection, you don't have to put a huge amount down anymore. It has quickly turned into a pretty level or maybe even slightly favoring the buyer market. And if you're an investor, still keep looking for property because long-term real estate is going to always be the best place to put your money. You just have to take into account that higher interest rate. Run your numbers and make sure they work, paying a 6.5% interest on your loan. And if it doesn't work, move on to the next one. And the same still applies to investors as home buyers. Know that there can be negotiation in the process with these listings. Also, as an investor, take advantage of the doom and gloom out there. There's a lot of people that own property, investment property, as well as their own property, that think the world is about to end. So take advantage of that situation. Reach out to your seller leads and see if they're looking to sell with all of this uncertainty. A lot of it is timing, catching them on the right time or the right day. So keep following up. Keep looking for those seller leads and always make sure that your numbers work. That is it for today, guys. Thank you so much for watching. Let me know what you think about this in the comment section down below. Where is the housing market and where are home prices going from here? Are home prices going down? Are they going to stay about the same for the foreseeable future? Or are they going to continue to go up? If you listen to Zillow and Redfin and all of these companies, they still think we're going to see like 5 to 8% home price appreciation this year. Let me know in the comment section down below, and I will see you next time.